Well, markets are set to close higher despite a disappointing result from McDonald's and some lackluster home sales data. Now we're joined by Greg Keating from James E. Coffee Securities. Greg, we've seen some decent EPS growth, but what's your outlook for revenue growth, broadly speaking?
I think what a lot of people have been talking about is, earnings per share has been growing, like you just mentioned, but the problem is the revenue isn't growing. Companies aren't growing their profits in terms of organically. So I think that is a concern here. Right now, there hasn't been much of a disconnect with the market, but I think that's more so the fact that the Fed's easy money policy is becoming more of a factor in that rather than the revenue growth in the companies, and that's why you're seeing the market make new highs again today.
So what are the consequences for markets? I know that we've had reassurances from Bernanke that the steroid stimulus won't be withdrawn until the economy can stand on its own 2 feet, but do you expect volatility when it is wound down, and what does it mean for the outlook?
I think that remains to be seen. Obviously, you saw right after that June meeting, Bernanke's comments really sent a bit of a shockwave through the market, and then he had his, a message was sent out to basically reiterate that the easy money policy is going to be in place. It's the tapering that is the debatable thing for the end of this year, possibly early next year. So it could be a volatile force for sure, just because the Fed's balance sheet is so large now, and it really has to be careful on how it communicates and how it also takes action on how to reduce that.
We've got a big week for company earnings this week, particularly tech stocks. Are there any that you'll be watching in particular?
Yeah, I think what you saw Friday, you had disappointing earnings from both Google and Microsoft, and you're seeing them bounce back today. You have techs and instruments reporting after the bell today. I think what this market needs is for that NASDAQ or for the tech stocks to be the leader per se, rather than that switch over from the more defense-oriented stocks such as healthcare and industrials and things like that. So I think right now you're looking for the market, you're looking for the technology stocks to be the leader of the market.
When you say looking for them to be the leader, is there any imminent factor on the horizon that's going to raise the prospects for more discretionary type stocks? I
don't think so. I think what remains to be seen is that in this low interest environment, you're looking for companies to expand not only their balance sheets in terms of profits, but also to continue that earnings growth that has remained elusive to so many companies so far. The market has trudged higher, and it's hard to put a cap on it. But right now, what we're seeing is basically, as long as the Fed policy remains in place, there's going to be a attractiveness in the stocks right now.
And just briefly, on the weekend we saw Japanese PM Shinzo Abe re-elected, continuation of Abenomics. Are there any consequences from the US of their huge easy money policy?
Well, I think there's a similarity between, obviously, the central banks around the globe and ours right now. So I think that re-election kind of gives investor confidence in Japan that easy money policy is going to remain in place over there. So it is a positive for that.
Well, there you have it. That was Greg Keating from James E. Coffee Securities, and I'm Jane Searle for The Deal.